Hey everyone, Daniel here, and welcome back to another video. Here today, I want to take you guys through 3 growth stocks that I'm buying now. These are all companies that I own and hold, and I'm looking forward to see continue to prosper over the next 5 to 10 years as their markets continue to expand. These are all companies growing at a massive clip with revenue growth from anywhere to tens to thousands of percentage points on a yearly basis. If you enjoy these videos, feel free to hit that thumbs up, and if you have any feedback that you want to give on any of these companies, please let me know in the comment section down below. Let's get started. Stock number 1, Shift Technologies. This is a company at the forefront of the e-commerce used car market. This is very interesting, guys. When we look at Shift, they really simplify the way used car selling and buying is done. If you want to sell a car on Shift, you go onto their platform, fill out a quick form, and can sell your car in 5 to 10 minutes. They then take care of the whole process and own the car. They refurbish it, they take nice pictures, list it on their website, and sell it at a marked up price. If you want to buy a Shift vehicle, you can do an at-home test drive, which is very seamless and really simplifies the process of buying a used car. When we look at Shift, one of their main competitors is Carvana, a company worth tens of billions of dollars, while Shift is trading at a market cap of $723 million. Shift benefits from what's known as price shopping, where consumers essentially look for the best value for their dollar, which will allow Shift to go right in with the Vrooms and the Carvanas of the world. Shift Technologies is a company growing at a massive clip, and when we look at their revenue growth here, guys, I'm going to take you through what analysts are actually expecting here. They're obviously reporting earnings on May 12th here, which will be a massive catalyst, in my opinion, for this, essentially a lot of clarity when it comes to their earnings results and the growth that they're going to be experiencing going forwards. When we look at Shift, this is a company that is expected to grow revenue by 130% here in 2021 to $450 million. And that growth isn't planning on stopping, guys. In 2022, their essentially analyst consensus for revenue growth is 85% to $824 million. And in my opinion, that could very well be conservative. When we look at Shift Technologies, they're going to be benefiting a lot from the global chip shortage that we've been experiencing, as you have a lot of car companies like Ford, like GM, slashing their projections for 2021 because of a lack of supply of chips. So where are consumers going to go? Used cars. What is Shift? A used car selling platform. So when we look at the demand that the used car market is about to experience, Shift will be a primary beneficiary of this and will be able to mark up their current existing inventory, which will set them up very well for the next couple earnings reports. Currently, they're expected to do, again, as we looked previously, right around $820 million in revenue in 2022. Their market cap is currently $720 million. I have a separate video on Shift going very in-depth into what they are, my expectations, and my price targets going forwards. If you want to see that, that will be linked in the description down below. But just generally speaking, Shift is very undervalued compared to its competitors, and generally speaking, they're very well positioned to grow massively over the next few years, as right now, Wall Street is pricing them for failure. Next stock on the list, we have HITI.V. HITI.V is a cannabis company that focuses primarily on the Canadian market and is slowly expanding into the United States. Their primary revenue source at the moment is retail-based with their Canna Cabana and Meta Cannabis locations in Canada, but they are also the leaders in the e-commerce cannabis accessory space, with the number 1 and number 2 largest cannabis accessory platforms in North America. They're vertically integrated when it comes to cannabis accessories, and their revenue is growing dramatically at tens to hundreds of percentage points on a yearly basis. When we look at this company here from a perspective of revenue growth, I want to show you guys exactly what I'm talking about. They went from about stagnation of revenue growth to massive growth over the past couple of years, and this growth is expected to continue going forwards as the cannabis industry continues to expand, as their current businesses continue to expand, and as they continue to make mergers and acquisitions going forward and potentially expand into the United States. Now, one of the interesting things about HITI.V is the way they play acquisitions. Obviously, they had an e-commerce platform called CBD City that sold CBD-related products. Now, what did they do? Just today, they announced that they're buying essentially a CBD cannabis essentially manufacturer that manufactures CBD-related products. So when we look at this platform here, they just acquired a company that will allow them to go vertically integrated from the CBD space and will allow them to expand drastically into the United States. Now, this is a company with 74% gross margins. I'm talking about the company they just acquired, and 40% EBITDA margins. So when we look at this company from a profitability standpoint, it will massively help HITI on top of the current gross margins that they have. And I want to let you guys know, HITI is a company with very strong financials. From a net income perspective, I think this will be one of the most profitable cannabis companies in the retail and cannabis industry as a whole. Just generally speaking, I mean, you have a lot of the growers of cannabis that will be much more profitable than HITI here, but out of the companies that are focused on e-commerce and retail-based, I think HITI is very well positioned to be one of the leaders in this space. And when we look at this acquisition here of the CBD manufacturer for, I believe it's right around, like $20 million. Yeah, right here. We look at exactly what they, acquired this company for, $20 million in US dollars. This is a company that's making $5 million a year in EBITDA margins. And when we look at this acquisition, in my opinion, this is one of those 1 + 1 = 4. Why? Because not only are they getting a great business at this moment in time, but they're also getting something that will be able to continue growing their current chains. So next stock on the list here, this is one of my favorites here, the Tattooed Chef. This is a company at the forefront of the frozen plant-based food market. And again, this is a massively growing company, and they're growing massively in their niche, which is the frozen food aisle, a $50+ billion industry in the United States alone. And when we look at this company, they're planning on expanding into much more than just the frozen food section through their innovation. I mean, this is a company growing and expected to grow at a massive clip, reaching potentially $1 billion in revenue by 2026, if not, with my projections, by 2025. Now, what's interesting with the Tattooed Chef, obviously, and people like to compare them with Beyond Meat, which I think is very valid, given that they're both competing in a very similar space. The Tattooed Chef is starting to expand into plant-based meat alternatives. So when we look at the Tattooed Chef versus the Beyond Meat, the Tattooed Chef has pretty similar growth, if not more growth than Beyond Meat. Its gross margins are and will be pretty similar to Beyond Meat, while at the same time, Tattooed Chef is trading at 2 to 3 times cheaper of a valuation than Beyond Meat. So when we look at the comparison between the two companies, I think they're both going to do phenomenally going forwards. But from a revenue and profit perspective, I really think the Tattooed Chef is the better play. Now, just today, they announced the acquisition of a company that makes Mexican food. And why is this interesting? They acquired this company for $35 million in cash. They have $200 million sitting on their balance sheet doing nothing. So why not acquire a company like this? What will this acquisition allow them to do? First and foremost, it allows them to expand their current production capacity. This company is facing a massive, a surge in demand for their products. Obviously, they've expanded into Target, Walmart, Costco, Sam's Club locations over the past couple of months, and the sell-through rate is absolutely phenomenal. So first and foremost, these facilities will be great in enhancing their current production capacity. Next, we have a situation where they're going to be able to enter the Mexican-style food space, which they expect will be able to contribute an extra $200 million annually in revenue over the next 2 to 3 years. This is absolutely huge, guys. When I look at my numbers for the Tattooed Chef, I expect them to potentially reach $1 billion in revenue by 2026, if not closer to $500 to $600 million in revenue by 2023. When we look at this acquisition that they just made, they said, all right, 2 to 3 years down the road, so 2023, 2024, we expect this segment of our new business to generate over $200 million a year in revenue. When we look at how this compares to their current business, their current Tattooed Chef business, that potentially means roughly $700 to $800 million in revenue by 2024 and potentially well over $1 billion in revenue by 2025, all for an acquisition that costed them just $30 million. Absolutely phenomenal move from management team. And what we've had at the same time happen here is them actually, expand their outlook for 2021, raising their revenue guidance to roughly $235 to $242 million, up from the $220 million they had previously Keep in mind, this does not include this most recent acquisition. We're going to get guidance from this recent acquisition going forwards, so it would not surprise me whatsoever for the Tattooed Chef to be in a place where they have revenue of anywhere from $250 to potentially $300 million for the year of 2021. And if we end up getting that, it's absolutely phenomenal. Now, one of the kind of bad things, like the only bad thing I can say about the Tattooed Chef at this moment in time is the fact that they're not very profitable yet. But I guess you could look at the upside and say that they're not losing a lot of money either. Currently, they're expecting adjusted EBITDA to be in the range of $2 to $4 million for full year 2021. This is down from their previous range of right around $8 million. Now, why is this? Because of the fact that they're expanding in a massive way, profitability will be hurt in the short term due to, again, really implementing this new facility, spending money on advertising, and really focusing on growth rather than profitability. So in the case of the Tattooed Chef, I am happy with management prioritizing prioritizing revenue growth over profitability. As right now, their goal is to scoop up as much market share as possible. Profitability, this company can spend the next 5, 10, 15 years focusing on profitability. But right now, they're in growth mode, and I want them to grow as significantly as they can going forwards. Now, one company I could not leave this out of here, Voyager Digital. This is my biggest holding in the stock market, making up right around 45% of my total stock market portfolio. It is a absolutely phenomenal company in the digital asset space, in the cryptocurrency space, and they focus on, they are essentially a commission-free cryptocurrency trading platform that offer over 50 different cryptocurrencies to be traded and interest on over 20 of those. Now, when we look at this from a differentiating point of view, there is no other platform out there that offers all three of these things. One, being able to trade over 50 plus different tokens on a certain exchange, and obviously this number is expected to increase massively over the next couple of months. 2, interest on all of your holdings, meaning that Voyager Digital takes your cryptocurrencies, lends them out to larger financial institutions, and you reap the rewards of gaining that interest. 3, you have a situation where they are commission-free, taking only a little bit of spread per each transaction and really focusing on the consumer, essentially satisfaction of the business. Now, when we look at it from an investor's point of view, this is a company growing at a massive clip, going from $7 million in revenue from January, $20 million in revenue in February, $30 million in March, and upwards of $60 million in revenue for the month of April based off of my projections. So when we look at a company like Voyager Digital, I've covered this a lot in the past, but just generally speaking, they're at the forefront of the cryptocurrency revolution and will continue to do phenomenally as long as cryptocurrencies are doing well. They're expanding into much more than just a cryptocurrency trading platform with the implementation of debit cards and credit cards that are backed by cryptocurrencies and will earn you interest while essentially that Bitcoin is held in your trust account waiting to be spent. It's actually earning you interest and compounding at the same time. You have a situation where they're planning on expanding into margins and allowing you to take out loans against your cryptocurrencies, earning them more money. You have a situation where they're expanding internationally throughout the year, getting into Canada in the next few months, getting into New York throughout the remainder of the year, and in the back half of 2021, European expansion is essentially expected. On top of that, you have them expanding into equity trading, being able to take your Bitcoin and essentially transact that directly into stocks without a two-step process. A simple one-step process of you taking your Bitcoin and buying Apple, Tesla, Microsoft, or any other stock in the stock market. So anyways, guys, thank you so much for watching this video. I really appreciate you being here. If you have any comments or questions about any of these stocks, please let me know down in the comment section below. I'm going to leave links down in the description as well, taking you to direct analysis videos on each of the stocks that I talked about, going through essentially my thoughts on what they are and going a little more in depth. So anyways, guys, thank you so much for being here. I really appreciate it, and see you guys next time.